A catalyst is all that is needed to send price action toward a sharp upside, and there might actually be one on this coming Monday. I have gathered 5 years of historical price action to determine targets to both the upside and the downside. Let's go over that data now for an edge over price. Welcome back to the channel on this Saturday. This is ARCa, and let's go to the movies. Let's kill them, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. This is actually AMC on the daily time frame here, where you can see that price action closed at $4.99, and I have calculated, like I said, a very extensive set of data, right? And that would be price action over the last 5 years. And what you can see here is that I have calculated the probabilities for Monday, right? So yes, I did calculate the probabilities of returns for Tuesday, Wednesday, Thursday, and Friday, of course. But in this case, we are worried about Monday. Yes, we have a catalyst coming in because of GME's annual shareholder meeting, and that's going to be held on that Bring Your Cat to Work Day Monday, right? So as silly as that sounds, it really is true. But, yeah, so you're expecting usually a pretty bullish Monday, historically speaking, right? You get a one-spot 74% upside on that day. Now, what I did actually consider calculating was also the third week of June, right? And that's historically. So now the third week of June is also bullish. So this is giving us a weekly return of about 31.84% to that upside. Now, I have calculated the standard deviation for Monday's statistics, right? And that standard deviation is coming up to a level of about 31.34%. Now, what that means is that price action has the potential to deviate, just in case, right? This is why you calculate statistics. So it has the potential to deviate 31.34% as well. Now, if that happens, right, I'm not saying that it is. I'm just saying that statistics are suggesting the potential in case price action decides to go that way. Okay, so it's very curious because that downside is leading to around $3.43. And if you move price action up just like this, there is a gap located right above here. So that would be $3.52. So that is very curious that the statistics would be leading towards that gap, right? So and it would bounce from that area there because it is a sharp and very potent area for price action to be in. It opened up from 352 here, and it hit that post-market 1340 in a matter of 2 days here, using that bottom side, right? So yes, we would definitely have to keep that in mind, right? But again, it doesn't mean that it's going there. It just means that there is that potential. There are gaps along the way towards the downside. One being right about here at $4.81. That has a gap bottom of about $4.33. So we have to worry about those things too. Okay, you guys, not only that, is that there's another gap over here too, right? There's another gap, 385 to the top side of about 413. So there are a bunch of different things that we have to keep under consideration. Now, if you're looking at raw price action here, you're going to notice that there is an inverted head and shoulders here, and that does have a measured move. Okay, so now that measured upside move, if you take a trend line right from the top end of you know what, there's actually two ways of measuring this, right? This is one way of measuring it, because if you take the trend line like this, you'll notice that there's confluence between the contact points right here, right? So that is giving you a very curious target. That is giving you a target of about $6.91 if you take it from that direction. Now, if you were to take it from this flat direction here and apply it towards the upside from this point, now you get this target right here. Check it out. So measuring it from that top side to the bottom side, which I honestly prefer, right? It would be like this. And that gives you a target that is $6.91. Okay, now that percentage gain to the upside from the open of the day coming in at, let's just say that we did open the day at around $4.99 come Monday. Well, that upside would lead to a gain of about 38.23%. From the open of the $4.99 to the measured move. So that rhymes pretty well with the standard deviation. The standard deviation is measuring 31.34%. And that 31.34% is leading to 655. So that gives you a range for take profit, right? So that would be, that's 655, whatever that is down there, to that top end of about 691 or 692. That's your potential range, okay? Of course, we can take Fibonacci and Fibonacci retracement, right? For example, the last day of the trade, and here you go. So check it out. Your 2-spot 272 and your 1-spot 618 are completely confluent with the range that we're already observing, specifically the 50% return, which is around 671, and that's right at the center of this range here of 673. So yeah, it is very, very confluent with geometrics as well. Okay, now what I also did is, in case that there is a massive, massive parabolic upside due to some crazy news or whatever comes in, I did measure the upper and lower bounds of your first, second, and third standard deviations. Now, please remember, guys, that these are statistics. They are definitely not certainties, okay? They are just here to give us the data. Okay, they are probabilities, not certainties. Okay, you guys, make sure to hit that. Make sure to hit those links to join the ARCa Bulls trading team, as I am presenting this deal here for a very limited time. I'm not going to keep it here all the time, right? Make sure to hit those links on the bottom left and bottom right, and read the chat right up here. Read the thing right up here to gain access to the Discord, where we're trading the financial markets on a daily basis. Every single day we trade there. Okay, team. So now, next thing to look at are those targets, right? So I already noticed that putting the upper bound here of the third standard deviation, which would be, the second standard deviation would lead you to a target of about $8.20, which is confluent perfectly to that 4-spot 236 Fibonacci retracement. Okay, now the 33.09%, it's curious because the upper bound of the first standard deviation is also confluent with the standard deviation, and also the price objective for the head and shoulders at around 689. So all of that is leading towards, it's just very curious that it is kind of rhyming there. So let's measure it. If we were to open up from 499 and we added that 33.09%, then 33.09%, let's see where it is, right about here, is leading to $6.65, right inside of the same range, just like we said, right? So yeah, it's just the data is really rhyming within this zone here. Okay, now of course there is one more target to put into consideration here. It's not saying that it's going there. Again, remember, they're just probabilities. But yeah, if we were to map out that price of 95.78% to the upside, then we would be getting this target here. Let's see, about $9.76. Okay, so I just want you to please be very careful. What's curious about that target on the 976 is that if you draw a line across it, just like this here, it's taking you to the top end of this massive gap, right? So there could be a reason for price action to go up there anyway. In fact, I would actually argue, and I would probably stop price action myself at around $8.70, right? Because this is the beginning of the gap. And so now that $8.70 is also very curious because it's confluent to your right here. This is your 870 that we just measured all the way back to the left. And this is your 4-spot 618 geometric mean at $8.52. So that naturally gives us the 4-spot 236 from the upper bound of the second standard deviation to the upper bound of the third standard deviation potential using the gap, right? Yes, I get it. It's up there at 973, but like I said, there's a gap there, so we have to take that as the target, not the data, right? The data in this case, I think, could be stopped by discretion and by psychology. Okay, you guys, so that is presently what I'm looking for the AMC asset, right? Let me just go ahead and put that back in. And guys, there's please know this. I just have to remind you guys, just in case you are interested, right? My beginner's crash course mentorship program, the 5-week program, is actually filling up incredibly fast right now. We're looking to start maybe next week on Saturday. So please make sure to get in touch with me at ArcMastersCourse at gmail.com to reserve your seat right away before it's too late. I'm gonna close enrollment here pretty soon, and it's just gonna be gone. Okay, you guys. So make sure to get in touch with me at ArcMastersCourse@gmail.com, and I'll make sure to get you in. Okay, you guys. So one more thing that I want to take a look at here is actually the options, and I will say that we have about here we go. So yeah, we're gonna get this renewed information on come Monday intraday. Right, so as soon as the market opens on Monday, we'll be able to see the adjusted information here. But we're at a max pain of about $4.50, and if you actually take a look at the price action right now, we're sitting at $4.99 presently. Right, that's your post and pre. That's your traditional market close and post market close on Friday. Okay, so yes, coming back in here to the options, you can see here that the max pain is absolutely $4.50. So why don't we go ahead and take a look at the open interest right now? And yeah, there's still a massive concentration here on the June 21st expiries, right? So if we go into the matrix here and observe this with a heat map, let's go to the June 21st here and go to that 20 strike, because that's where it's been, right? Check it out. The 20 strikes really haven't changed. There are 98,500 options expiring this coming Friday. Okay, now if we're looking prior to this, let's see. Okay, so currently in the money we have So currently in the money we have about 21,529 at $4 for AMC. Okay, and we're getting dangerously close here because there's a massive concentration again right over here at the at the $6, and that would be 42,000 open interest at $6. Okay, so it's interesting that you would see this number here because we're already observing a potential jump from that $6 target, or sorry, from the $4.99 target into the $6 zone, like from the statistics and the psychological take profit zone from this inverted head and shoulders. Okay, so I just wanted to share some of that information for you and see if you can use your imagination so that we could solve this puzzle together. Okay, you guys, but I very much appreciate you for coming on by. Please reach out to me. Make sure to join the ARCa Bulls trading team using these links down here, right? This is going to be, it's just for a limited time, and also reserve your seat for the ArcMastersCourse, the 5-week charting and trading mentorship program for beginners. Okay, team, thank you so much for watching, and we'll chat very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I could not suggest for you to buy, sell, or hold any assets whatsoever. Ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and or day or weekend. And I'll catch you at the bell on Monday. Adios, team. Oh, yeah.